Monday, January 5th. Sorry, Monday. It's a new week, January 5th. And last week, it's a new week, new year. So last week, markets, was playing around, wondering when it's going to be stable and all that. So, yeah, on this place, so let's see something. Can do line chart. Yeah, yes, beautiful. So here we can see that M1S came in here, has been doing some really good push to the upside, really good push to the upside, really good push to the upside. Then they broke structure to the downside, and then what did the market retested what to the upside? And then remember trading range. If you draw your trading range from here to here, you will know that it is in the premium zone. Then we broke structure again to the downside. So this is the retest. So we are looking towards break structure to the downside and hopefully break this major low around here. So this is what I'm expecting on VIX 10 1S. So that's what I'm expecting from VIX 10 1S. So going back to this, we can see broke our first structure here, and market broke structure again here. The market broke structure again here. From here, market broke structure again here. So what are we now looking at? So remember our trading range. If we draw from here to here, first you can see that market came into the premium zone before selling. If you still bring it down again from that place to this place, you can see that market is in our premium zone about to be selling. So we've got what we want to get from 24 hours. Although I didn't use it on 24 hours, I used it on the 4 hours so that it will be more clearer. You can see when market sold, market came into a supply zone, sold again, market came into the supply zone and it's about to fall. So this is on the 4 hours, right? So we've gotten what we need on the 4 hours. Then on the 1 hour, we can see a break of structure on the 1 hour. You can see this was the last low. This was the last low that pushed the market to the upside. So you can see market breaking the structure. So a new lower low is formed. And then what the market do? Market came into what? Into a supply zone and did what? A higher low. So now this is the whole range. So this is where we are trading between from here and here. Excuse me. So this is what for me and intraday trader, this is what I'm focused on. Although not really focused on, but for the meantime, this will be your range. For us that want to do a little swinging or intraday 2-3 days, this is going to be our range. So it's going to be just when I mean range now, this is going to be where we are going to be trading from. We're going to be trading from here to here. This is going to be where we're trading from. It's going to be where we're trading from. So remember your trading range from here to here. Sorry. From here to here is our trading range. So now market has come into, remember market, and if you can see the 1 hour, but you can clearly see break of market structure on the 1 hour. You can see the break of structure on the 1 hour. You can always see it. You don't even need to go down to the lower time frame. You can see a break of structure to the 1 hour. And then once market broke it, what the market came down to discount. But we cannot be selling. We cannot be selling in discount. Market came into discount. We cannot be selling in discount. So what the market did? Market rallied back up. Market rallied that back up to premium. And so even as I now said, there's been a setup because this is a supply zone here that you can just continue to sell to the downside from here like this. From here, stop loss just above here. Then your take profit is what? It's going to be what? This low that wants market to actually break. This low that want market to actually break. So this is going to be like a good 1:8. But then of course I always want to go down to the 50 minutes, 30 minutes so that I can give a precise entry. I can enter precisely because I don't want to give Deriv all my money. So I want to enter precisely. So we can also see a break of structure here, around here. Also see a break of structure around here, right? So this now is a supply zone. But so because this one thing about refining zones that most people make, when you are refining zone, sometimes we can actually make a mistake and not choose the right zone. So let me explain something. So you can see here, if you notice around here, this is supposed to be the other block, right? This the last bearish candle for the bullish candle, and you can see how market tapped into it, right? Then if some people were to use fair value gap, they'll be using fair value gap from here to here, right? So we can see in all, you see market has tapped into the zone. If you go down to the 1 hour, you can see that market tapped into the clear zone. But if you are in the 15 minutes now, you will notice that market did not get to, if you are in 15 minutes, you know that market did not get to what, this supply zone around there. So what you should do is, market has tapped, and then that's when you now see what they call chart pattern. Look at this particular place now. You can see market came, ranged up, and then did a dodgy candle, an indecisive candle, and what do you see next? And that candle what came and closed below it. So this is like a very good chart pattern for you to realize that okay, we are changing the structure to the downside. So this is changing structure to the downside. So either way, you can either enter from here, you can either enter from here, and your stops just below the fair value gap. And then what are we targeting? We are targeting this place area here. So this is a 1:14. Remember, on the 1 hour it was around 1:12. So it's a 1:14. And least you forget, because this is a game of, this is a probability scale. So what I will expect is just bringing many confluences to actually tell me that okay, what I am doing is right. So we can see trend line. Let me draw this. So we can see trend line. Sorry. So we can see trend line around here. For most of us that trade the trend line, you can see trend line here. You can see at least you putting your stops just above the trend line. It's a very good place, just above the fair value gap, above the trend line. And then so this is a very good setup like this. So I hope you were able to get one or two. It's just top down. So I just did top down analysis and then mixed it with market structure, top down analysis, market structure, what we have, and then added other confluences, other blocks, trend line, and then we have this. So this is a very good trade. But if you want to be very, very conservative, because this my risk is a bit low, so it's better if you just take it up above this next time. So you are doing a 1:9. But obviously, since this is going to take a long while, we have to catch as many people as you. So naturally, I'll just put it around here. Here is okay for me. 1:13. Here is okay for me. So yeah, thank you.